What's up? What's up? What's going on, everyone? Can everyone hear me? David, yes, this is recorded, my friend. So you're good to go. What's up? What's up? What's going on, Alfie?
Good morning. Good morning.
What's going on, Brunel, Bree? What's up, Shane? What's going on, Miss Fierce, Brianna, Bridget, Coco, David, Eva, Jazz, Jody, John? What's going on, everyone? How y'all doing this morning? All right, so
Fantastic. Thank you for asking. How are you today?
doing great. I'm super excited to show you guys this. So before we get started, we got 30 people on here. I need 30 people to go to the chat, Facebook, Telegram, type them on, type Pip Smoke, all right? I want to make sure we get as many people on here as possible. Being that this is a different day than we're usually on, all right? So wake people up, let them know. Let me turn on some air. All right, make sure I got my mic right. All right, cool. Okay. Move my video out the way. Oops. All right, cool. So, what's going on, everyone? It's your boy Deante section. How you doing? Usually, we're doing Forex 101 on my calls, but today I decided to reveal one of my main strategies. Okay. For you guys to take advantage of. Start add this to your arsenal of what you know already. All right, and you will be good to go. The strategy I'm about to show you is one that I show all of my coaching clients, all of my students. It's one of the first strategies that I show. One moment. All right. So this is gonna be one of the main strategies that I show, like everyone that comes to me about Forex as of about, I don't know, 3 or 4 months ago. Okay. Now I want to go ahead and let you guys know what I'm about to show you is nothing new. All right. There's nothing new in Forex. First of all, let's just put that out there. Okay. But this is something that I learned about a year ago. And I started focusing back on it about 4 or 5 months ago, and really putting other things that I already knew about the market into the strategy. Okay, if you're familiar with the market makers method, you might recognize this strategy. Okay, I've added some things to it, and I've simplified it a lot more. Okay, now I will say this out the gate. There is some things with the strategy, like extra indicators and stuff like that, that I will not be able to give you. Okay, but what I've done is I've set it up in a way that you don't need the extra stuff. I mean, that's just like icing the cake. But being that people have paid me a lot of money for that stuff, I can't just give it away. That wouldn't be fair. Okay. But I have put this together for everyone to take advantage of, even without those indicators. Okay? So, with that being said, let me go ahead and just lay the groundwork for this strategy for you guys. All right? Now, this is the strategy that I've showed my dad, my sister, and my brother, and this is the only strategy that they use, okay, to make over $100 a day, $500 a day. Before I start naming numbers, let me also say that, put a little disclaimer in there, all right? Past profits do not, don't promise future profits, basically, all right? It's what you put into it. There's no guarantee that you'll make money with this, but I'm just gonna go with things that I made money with, and hopefully, it can help you also. All right. With this strategy, I've been able to flip $100 accounts in 2 days to $1,000. All right. When done right, you have minimum drawdown. You have a lot more winners than losers. This is a trending strategy, which means that you got to be patient, wait for the setup to happen, and go with the trend of the market. It can be used on all time frames, whether you're a scalper, intraday, or swing trader. All right. Now, let me bring this up real quick. Right here. So what I'm gonna do is I'm gonna try my best to keep it as simple as possible. This is the first time you guys are hearing this information, but it won't be the last time. Okay, we'll probably be going over this this whole month. All right, doing sessions on Wednesdays. I have my Q&A sessions, and then we'll go over this. Okay, so this is the pimp smoke strategy. We're gonna set this up. A couple of indicators that you're going to use is the 13 EMA, the 50 EMA, the 200 EMA, the Traders Dynamic Index, or the RSI, or the stochastic, whatever you're more comfortable with, all right? For this to work on your mobile, because we have so many indicators, with like 4 of them, right? I do suggest having the TradingView app or VPS for NT4. Okay, VPS is more recommended. And you guys will have this document, and I'll have like a link to a VPS for you guys. All right. Before I go any further, can everybody hear me good? Are we good? Everybody still good?
Yes.
Okay,
Yes.
cool.
Perfect.
Is my video in the way? Is there a video on the screen or no?
Clear.
All right, cool. All right, so we are going to. I'm gonna be using Administrator 4, all right, because you can have unlimited indicators on there, which is why I recommend the VPS for you guys. So let me bring that up real quick, because as we go through, I'm gonna be setting this up at the same time. Keep everything super simple. While that's coming up, the indicator settings you're gonna have for the EMAs, they're all gonna be set to close exponential, all right? If you ever have the TDI, but if you don't know what the Traders Dynamic Index is, it's okay, I'm gonna show you, okay? If you don't have the TDI on there, if you do, it's gonna be set at 21, stochastic. Matter of fact, let's just do it. Good. There we go. Here we go. Okay. So the EMS is gonna be the 13 EMA. Shift to 0, exponential close. I make my 13 EMA red. That's it. All right. You guys see MetaTrader 4 right now, right?
Yes.
Okay, cool. Next indicator is going to be, my bad, the 50. Exponential, close, I make mine blue. All right. Next indicator is going to be EMA 200. I make mine yellow. All right. Next indicator, before we're not going to throw the CDI on here yet. I'm going to keep it super simple. Next indicator is going to be stochastic. Second. Isolating. All right, so we set up 14, 3, 3, close, close, exponential. All right. On the levels, I have the 20 and the 80. Now you could add the description here. I put buy at 20, sell at 80. Okay? Then we hit OK. Now you guys can see that down here. Okay? So that's the setup. For support resistance, you could mark them off. I mean, there's a lot of my members, I mean, they don't even mark off the support resistance. They just use the EMAs. Okay? But you could put your support resistance in there too. I'd like to do mine off of a 4-hour time frame. Okay? So 4 hours. You guys already know how I do my support resistance. We just have the you got my RSI on here. Right? Support resistance right there. So let me go over the rules real quick. Let's go back to this. All right, so here's what you need to understand first off the bat. If the price is above the EMA 200, the price is above the EMA 200, the trend is long. Okay? If price is below the EMA 200, the trend is short. Okay? The price is above it, the longer trend is long. The price is below it, the longer trend is short. Your 50 EMA is basically the intraday trend. Okay? So if price is below the 50, then the intraday trend is short. If price is above the 50 EMA, the intraday trend is long. Okay? All right. So here's the rules for a sell. All right? Look at the higher time frame for the trend direction. Like I said, price is above the 50, it's the uptrend. If price is below the 50, it's the downtrend, all right? So if you're trading off the 15-minute, you gotta look at the 1 hour trend. If you're trading on the 1 hour, you gotta look at the 4 hour trend, all right? When the 13 crosses below the 50 and price is below the 13 EMA, they're good for a sell, all right? That confirms the downtrend. If the 13 crosses below the 50 and price is below the 13, they're good for the sell. All right. Now, I got market sentiment line on the TBI is below the 50. This could also be EMA 200 is below, is above the 50 EMA. All right, stick with me if you guys are confused. It's okay. All right, we're gonna go through everything. So, if the 200, basically, if the 50 EMA is below the 200 EMA, then market sentiment is short. All right, market sentiment is downtrend. Okay. Once the 13 crosses over the 50 and pulls back, pull the trigger for the sell. All right. Now you can hold the sell. Let me just show you. Let me show you. Right here. All right. So we have.
What does pull the trigger mean?
Pull the trigger means sell. Pull the trigger. Hit the button. Sell that thing. You know what I mean? Yes, no. Pull the trigger means jump in the trade. All right. When I say pull the trigger, jump in the trade. All right. So here's the 13 EMA right here. Here's the 50. Here's the 200. Okay. Now, price falls below the 13 EMA right here. And then we have the 13 crosses over the 50. You wait for a pullback right here or right here, and you jump in the sell. Okay? You can ride this sell as long as price is below the 13 EMA, you can stay in that sell. The trigger to jump out of the sell is when price crosses back above the 13 EMA. Okay? Wait for price to come back down below, and you gotta sell again. Once price breaks the 13 EMA, you gotta sell again. Okay? So let's go over the rules real quick. Let's go over the rules. For a sell, we want price to be under the EMA 200, under the EMA 50, and under the 13 EMA. All right? So like how price broke back above the 13 right here, you're gonna wait for it to break back down, and you could sell. You could wait for a pullback and then sell. All right? Let me make this a little bit more simple. Here's the 1 hour time frame. Right now, currently, this is on USD. I'm gonna go to gold. All right. Check out gold. All right. So your trigger. I gotta look at a sound. Don't let me. We're on sale right now. Sorry guys, I'm on my VPS, so alright. So your trigger to get in the trade is on the 1350 cross. Okay? On the 1350 cross. So if we're looking at the 1 hour from here, one moment, my VPS is freezing. Alright, there we go. From here, bear with me guys, bear with me. Alright, let me reset up. Let me bring up my other meditator because this isn't gonna work. Bear with me. Sorry guys, my VPS is freaking not working out for me. One moment. So while we're waiting on my other meditator, let me just go over the rules real quick. So what you're doing is you're gonna be waiting for price for the 13 EMA and the 13 EMA to cross over the 50 EMA. All right, on every 1350 cross, then if price is below the 13, you're looking for a sell. If price is above the 13, you're looking for a buy. Okay? When price breaks back below, like if you're in the sell and price is below the 13 EMA, and then price breaks back above the 13, that's the signal to get out that trade. Okay? And wait for it to set up again. All right? And now it's opposite for a buy. If price is above, if 13 crosses above the 50 EMA and price is above the 13, you're looking for a buy. All right? You'll wait for it to pull back, wait for price to pull back to the 13 EMA or the 50 EMA, and then you'll pull the trigger and execute a buy trade. Once price breaks below the 13 EMA and we're looking for a buy, if price breaks back below the 13 EMA, that's just signal to get out that trade and wait for it to go back up. Okay? When I show you on this meditator, you'll be good to go. All right.
I have a quick question.
Go ahead.
Okay, can you explain the market sentiment line? Could you give me an example of what that looks like? I saw that you were doing it with the.
Yeah. Well, the market sentiment is going to be on the traders dynamic index. I'm gonna go over the TDI on the last half of the call, as
Okay.
I want to get the most simple method out for you guys first. Is that TDI? It does take a little bit of getting used to, so I want to give you guys something that's super simple. Okay. Okay. that's better. So let's say here. Let's go from here to here. Okay? Now, if we take buyers and prices, I'll go with that. Yep, you'll have the PDF also. All right, so if right when we came to this market, we saw all this right here, right? Now, it's clear that this is the downtrend, right? Let's just do 4 hour. Let's look on 4 hour. All right, it's the downtrend of a 4 hour. So I'll drop down to the 1 hour. On the downtrend, every time price pulls up to the 13 or 50, depending on where the stochastic is, then jump in for a sell. So look right here. Price pulled up to the 50 right here, and it's extremely overbought on the stochastic. That's your trigger. That's how you know it's still going to sell. So when price pulled up to the 50, going off of the 4 hour downtrend, jumping for the sell. Okay? The stop loss, you can put a stop loss either above the 200 or 20-25 pips above the 50 if there's room. Okay? But with your EMAs being straight down like they are, this is a strong downtrend. So once we pull back to the 50, right? The 13 is still below the 50. You can hop in for the sell. And you can stay in that sell until price crosses back above the 13. Or you can hold it until price breaks the 50. If it doesn't break the 50, stay in it all the way. If it don't break the 50, when I say break the 50, I mean if this 13 doesn't cross over the 50, stay in it. Stay in it. Stay in it. Once it cross right here, you can get out 130 pips, right? But every pullback to the 50 is another entry. Okay? Like here. Price came to the 50, look at the stochastic, right? If it's extremely overbought, it's starting to sell. If this stochastic is overbought and price is at an EMA, if it's overbought and oversold, sold and price is at EMA, that's your trigger to get in that trade. Okay? Does that make sense so far what I said just now?
Yeah.
Okay? On a strong downtrend like this, every pullback to an EMA when the stochastic is overbought, if we're going for a sell, that's your indication to pull the trigger on that sell. Okay? So, let me just review. With the EMA 200, the 50, and the 13 down here, this is called POMA. When you have the EMA 200, the 50, the 13 EMA, it's called POMA. That's a strong trend. All right? POMA stands for Perfect Order of Moving Averages. Okay? If you have POMA and you're looking at this, and you have POMA, like my mentor was saying, pull the damn trigger. All right? You better jump in that cell. Okay? And you can go for 10 pips, 20 pips, it doesn't matter. I go for 15, 20 pips. Okay? Depending on what time you're on.
Can you repeat what that acronym was again?
POMA, POMA, stands for Perfect Order of Moving Averages. So you have the 200, the 50, and the 13. Perfect order of moving averages. Now, once the 13 crosses back above the 50, like here, okay? Once the 13 crosses back above the 50 and prices between the EMAs, the 200, 13 to 50, they're not trading. you are not trading this. Why? Because if it did so, it could come back down, bounce off the 50 and go back up. Okay? If it does buy more, it could go to the 200 and it'll come back down. All right? When prices between these EMAs, you are not trading. Okay? Now, with that being said, let's look at a buy. Is there any questions on the sell right now? I'm going to show you guys how to scalp real soon. But is there any questions on what I've gone over so far? Does it seem simple enough?
Yep.
All right.
Hey, Deante.
What's up? What's up?
So I guess in the case when it comes back up, I mean, are you waiting for a clear push away before you get in?
Yeah. Okay. So like here, when it comes back up, like here, or over here, right? If it comes back up to my 50, I'm looking for a sell, I'm not jumping in on the buy candle. I want to wait until it does either have an engulfing or I see some kind of like a star pattern, right? But you can also set a sell stop. So if it pulls back up to the 50, you can set a sell stop below the last 2 or 3 candles, right? So when it does break out, you're good to go. Does that make sense?
Okay. Yeah, I got you.
So you don't have to sit there and wait for it. For me, the better pullback, for me, I like to do it at the 50 if I can. If price is at the 50, that's my optimal area of entry. Okay. So everyone good? Do you say buys?
I have one more question.
Go ahead.
Okay, you just made reference to price being in between the EMAs and not trading at that time. Is there a specific time frame that you're looking at, or like, okay, how we're looking at it on the 1 hour chart? If you were to switch over to the 4 hour chart and price is looking different on that chart, I mean, how do you go by which chart you're looking at to determine if you shouldn't be trading at that time? Because when I switch my time frames, the charts look different.
That's what I was just about to go over.
Okay.
All right. So if I'm an intraday trader, right, and I'm trading off the 1 hour, this is my chart. All right, this is my time frame. So I'm not gonna look at no other time frame. If it's between my 1 hour time frame, my 1 hour EMAs, I'm not gonna trade it, as I'm trading off of the 1 hour. But if you're a scalper, it might be a different situation like this. Let's just throw this on you. So if you're a scalper, right, you want to take, target entries or whatever, then you're gonna look at the 1 hour. You could look at 2 different things, right? You could look at the 1 hour, then break down to the 15-minute. So the 1 hour trend is down. I'm going to the 15-minute. Okay, here we are right here. 1 hour trend is down. For me, I'm gonna go to the 15-minute. I'm gonna wait until I have a 1350 cross on the 15-minute, and price is below the 13. This is right here. Now I'm gonna enter the sell here. I'm gonna take my 15, 20 pips. I'm out that thing. Right? Now I'm gonna wait for another pullback up to the 50. Okay? So it all depends on what kind of trader are you, or what kind of trader do you want to be. Understand what I'm saying?
Dee, I have a question about that cell that you were just talking about. So if you put the cross thingy or whatever that thing is, like when you're looking at that, the stochastic is not like oversold, so it's not
Okay.
in the marked sell zone. So how would you know to take that one?
So for when the 1350 first crosses and we have a pullback, I would still take this because I still have Palmer, have perfect
Okay.
order of EMAs. All right.
Okay.
So this is the 1350 is the first confirmation, right? Well,
Okay.
actually, the Palmer is the first confirmation, and then 1350 is the second confirmation, and then the stochastic will be the third confirmation. But if I have 2 out of 3, and I know I'm a
Okay.
strong downtrend on the 1 hour, I'm gonna jump in that cell.
Okay. Thank you.
No problem. Okay. So this stuff, I have rules in place, but this is a very flexible method. Very flexible. Okay. And once we throw this this dynamic index on here, it's gonna be a lot more clear. I just don't want to do that first because I want those of you that are busy, you got stuff to do, you'll have this already in its simplest form, okay? In its simplest form. So,
I have a question.
go
What are we? It's Bray. What are we waiting for? You said we wait for the pullback. We wait till it get to the 50. Is that right?
Yeah, from the 15, so on the 15-minute, 5-minute, and 1 minute, definitely wait to the 50. Wait till you have a pullback to the 50. Anything above the 15-minute, I mean, you could take it at the 13, and then you can be more flexible. But me personally, I try my best to always wait till prices at the 50. Whether I'm going for a buy or a sell. Okay?
So you're waiting until it gets to the 50
Yeah.
to enter.
Yeah.
Okay.
Now, if you're on a higher time frame and you see that prices are overbought, but you're at the 13, like on the 4 hour, a lot of times, let me just show you guys real quick. At the 4 hour, when we pull back to the 13, it's not completely oversold right here, but you'll notice that price will respect the 13 a lot before you start to see a reversal on the higher time frame. 4 hour, the daily time frame, we'll look at it. Well, this daily respected the 50 a lot. But a lot of times you see if it's a real good trend, you'll see it respect the 13 on the higher time frame a lot more. So I hardly ever wait for the 50 on like the 4 hour and above. I'll take a sell or a buy at the 13 EMA, especially if like here I'll be able 1350 cross. If it pulls back and it's oversold like this, overbought, I'm sorry, I would definitely take it. Smaller ones I might be a little bit sketchy on, but if it's all the way overbought at an EMA, I'm taking it. Okay? Just want to show you guys real quick. So, for scalpers, you might look at the 15-minute time frame. Okay, let's go to the end. 15-minute. You see the trend. So you have a 1350 cross right here, but it's still below the EMA 200, right? So taking that buy will be a little bit more sketchy. Okay? That's below the EMA 200. Me, if I saw something like this, I'd rather just move to another pair where the trend is clear. All right, we have options. Just because you look at a pair doesn't mean you have to trade that pair. You guys feel me? So, right here.
So, I got a question. When you're setting up your take profit for this, do you just have it designated like I'm going to take 10 pips or I'm going to take 15 pips, or do you have a way that you can predict where you should be setting your take profit?
All right, so 2 ways to set the take profit. You can have a set amount of pips, 10 to 15 pips. That's all you need, really. 10, 15 pips. Or you could do just like we do with the money line strategy, take it back to the neckline. So if you have a pull up here, if you were to take this down, take it back to where price came from over here. Okay? Here, take it back to where price came from, the sell, right there. Alright? Came down, pulled up to the EMA 200 here, take it back to where price came from, take profits right there. So you can have a set amount of pips or take your profit at the neckline, wherever price came from. Make sense?
Makes sense. Perfect.
All right. So let me show you guys something. Now, when you start to have stuff like this, prices like, starting to bottle up the EMAs, right? And stuff to look at the DNA strand. Just don't trade that, right? I mean, you can, but it's risky. This is risky business here, right? The best pairs to do it on, or the best time to do it on, is when you have clear and concise trends. I mean, that's definitely a downtrend, right? When you have POMA, perfect order of moving averages, okay? Look at that strong trend. Every pullback, sell. Look at this stochastic. Pullback. This one right here, could it back. You can wait till price is extremely oversold. Look at it. I mean, overbought, I'm sorry. Look at it. All right, you see it's right above the 13. So you can wait for it to pull away and jump in that sell. All right, you can jump into here, set your stop loss above the 50 EMA. Let it ride. All right, once price goes back above 13, see how it's kind of playing with it right here? That's just the validation, right? You can hop out if you want and wait for another entry, right? This right here would have been, if we would have waited right here, about 44 pips, 40 pips, right? But every pullback is another entry, okay? Is there any questions about that? Did I lose anyone so far?
Hello, sir.
What's up?
I want to know why we should use the VPS for this strategy on our mobile.
You want to use a VPS because you can't have the MC4 on your mobile device, right? You can't have it set up with more than, I'm sorry, the VPS is really for like the extra indicators, or like if you have the CDI on here, okay, if you have the CDI on here, then definitely don't want a VPS, so then you could view the actual MetaTrader 4 on your phone like this. Let me show you. Let me show you. 1 second. One moment, so. Can you guys see my camera? How do I make this thing bigger?
Yep. We can see your camera.
Am I on the big screen or no?
Big screen.
Okay, so this is what it looks like on the VPS, on the mobile app, or on the remote desktop app. See what I mean? Now, this is what it looks like on MetaTrader 4. Wait, can you guys see this?
Yes.
Okay, now this is a lot better than the MetaTrader 4, right? Let me show you what it looks like on MetaTrader 4. Especially once we add the trader dynamic index. Put it up. One moment. All right, this is what it looks like on MetaTrader 4. Look at the bottom indicator. On the MetaTrader 4, you can't separate the stochastic from the bottom window. All right, so it looks a lot cleaner to me on the remote desktop. You feel me?
Yeah, I
But
can't never get mine to look like that. My phone app.
yeah. So for I mean, the app looks a whole lot cleaner to me. And it's like $20 a month, right? So I mean, it's very inexpensive. There it is. One more time. Right there. And then if you have other indicators on the MetaTrader 4, this is the way for you to use those indicators on the mobile device. Right? People always ask, how do I get my MT4 indicators on my phone? This is how. Using the VPS. Make sense?
Yes.
Deante,
Yeah.
would you be able to show us like an example of the current market and make a prediction with these indicators where it's gonna go?
Yeah, I can look at it. Before we do that, does anyone have any questions so far?
Hello.
Hey, what's up? What's up?
Yes. So, what about the cross emis, the cross emi alert on the pip smoke strategy?
I got the same. Oh, what's the question? What about the cost for what?
Cross alert MA on the pip smoke strategy.
The cost
I thought that's why we should use the VPS so that we can get the alerts. But according to what you are showing me, some of the 30 indicator is not hitting the 50 MA. The 30 MA is not hitting the 50 MA before we sell. So it's not going to give us alert. So can you explain that one for us why we should avoid the MA cross indicator alert?
The MA cost indicator?
Yeah.
Well, you could find one online. I have one, but that's one of those indicators that, like I said at the beginning, that I can't just give away. You could probably find one online.
Okay.
All right? And so I keep this simple with the less stuff on it so people can catch on to it pretty quick. All right? Just understand this, as long as the 13 EMA, if you're looking for a sell, as long as the 13 EMA is below the 50, the sell is good. Okay? Once that 13 EMA crosses the 50, then you start to get just a little bit sketchy. Like here, that would have made me nervous. I would have waited until it crossed back down. Okay? Same thing for go ahead.
I'm sorry, Deante. Excuse me. So you're saying that on this odd USD that we should get in for a sale?
No, I'm not telling you to get in at all. I'm giving you an example. I'm not telling you where to get in right now. I'm telling you, if you saw this at this moment, right? If you saw this at this moment,
right?
Like here, if you saw that, and you know on a big trend, it's a downtrend, I was still with my 30-cent VMA to cross back below the 50. Okay? I'm not telling you where to trade right now. All right?
Okay.
All
So,
right.
no, let's look at all USD currently, current market price, right? Look at the 1 hour. Because we're trading off the 15-minute, looking at the 1 hour, I'm between my EMAs. So I'm not looking at, I'm not trading this. All right? I'm not trading that. Because I trade off the 1 hour trend on the 15-minute. You might trade off the 15-minute trend, which right now is up, right? So you go down to the 5-minute. So this is a perfect example. Right now, we're at an uptrend, right? According to our 15-minute. How? Why? Because we have POMA on the 15-minute. Perfect order of moving averages. The 200 is at the bottom, then you have the 50, then you have the 13, and prices above the 13. This is an uptrend, right? Short term for now. So then I'll go down to the 5-minute. I have POMA on the 5-minute, all right? 250, 13. Prices below 13, jumping up to 50, right? I still wouldn't jump in this buy, not yet. Until my stochastic bottoms out, which it looks like it's going too soon. Once this bottoms out a little bit more, I would look for a buy for 10 pips. Okay? Or you can hold it. And once price crosses, you can hold it as the price comes back down below it. All right? But right now, if you look at this, look, oversold on the 5-minute. On this lower time frames, I mean, I definitely wish it's really oversold. Okay? That's a clear indication that the reverse is going back up. I got you, Shane, don't worry. That the prices will go back in the other direction. Okay? 10 pips here. I'm looking at the stochastic is right here. That's the entry. After it crosses back up. So the entry with the band right over here. Sorry. Right over here. Okay, on the pullback. Entries right here. Stochastic is oversold. You're at the 50. Right? So if there's stochastic, is in any of these oversold, over bought areas, and like I said, you're at an EMA, pull the trigger. Okay? So this is still coming down a little bit. But once it does, once it stops selling a little bit, I mean, that's a good sell. I mean, a good buy, I'm sorry. At least 10 pips. Okay? Let's find another pair. Do you guys need to see any other examples, buy or sell?
I have a question for you though. So you know how you were looking at the 15 and then drop down to the 5 for the entry, or look at the 1 hour to drop down to the 15 for the entry. Do both of those time frames need to have POMA before you get into the trade?
It's better if they look alike. If it's 15
Okay.
minutes in POMA, but in 5 minutes to be in POMA.
Okay.
Right. All right. So let's say I looked on my, okay, hold on. Shane, did you have a question? I saw your hand is up.
I was just wondering if you're going to give us a copy of the typed out strategy that you were showing us on the screen earlier.
Yeah, you guys will have that.
All right, perfect.
All
Is it
right.
going to be in the back office?
I'm gonna pass it on to Zeus, and we'll probably he'll have it in the app, and probably more than likely in the back office. Okay, and then if I have to do a shorter video specifically for the back office, then I'll do that also. Okay, it's just gonna be like 2 hours long because I'm knocking out everything in one push. I usually like to do my videos in 10 minutes and then let it go. Videos are by right there. All right.
Did you, excuse me, did you already go over gold?
No, I did not go over gold. You want to look at gold? Let's look at gold. So let's check out. We've been scalping gold all week. Scalping it. All right. So gold is in the uptrend right now, right? Let's stop and pull back now. But it's in the uptrend. If we look at the 4 hour, we're still in the uptrend, right? Go down to 1 hour. Okay, look at it. I don't need that.
Still a sale, right?
Oh no. This is still in the uptrend. You're only looking for buys. You're only looking for buys. So since this is in the uptrend, we have a pullback right here. Stochastic was coming to be overbought or oversold. You might get a bounce up to 50. That's it. I wouldn't say the whole 187 pips, but I mean, I would take 25, 50 pips out of it. Being that gold right now is at such high weekly resistance area, I mean, I'm pretty sketchy on it myself. But let's break this down a little bit more. All right, let's go down to the 15-minute. 15-minute, we have the 1350 cross, right? But price is not crossed over the 200. So you're still looking for buys. You're still looking for buys. When do you trade this? Probably not. Why?
This would be it's in between your EMA, so that was the zone you said you don't trade in, right?
Yes.
Okay.
Even if we started on the 15-minute, right? Now this one is selling. This one is selling, it's like 80 pips, right? And then I look down to the 5-minute. I should have Poma in the 5-minute. Yeah, we got Poma, right? But this Poma just happened. I'll wait to see where my pullback happened. As you see all over here, this is all just consolidation, right? I'm not trading that. That's how you get caught in whiplashes and fake outs. I'm not trading that. I want to see this. A clear trend. Okay? Even though my 13 is so close to the 50, I still might take a stab at this. It's best when they're all spread like this. Spread apart. Boom. 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 Check it. Boom. Stochastic all of a sudden.
So you think the sale, it will be the retest, and then it'll go to a buy?
Right now, Um, I'm thinking this maybe it could be a recess and then a buy, but like I said, I mean we're still in the uptrend, so the only one to take buys. So if you were to take this ugly thing, it would be here, right? If you were, and remember this is gold, so you don't want a nice size stop loss, but
Right.
it will be. I mean you'll wait until it falls back above the 13, you can take it, or you can
Mm.
buy from the 50 to the 13. That's it.
Yeah, I was looking at the news and it said gold was going to continue to go up.
Yeah. So, is there any questions about the strategy now? We're not looking at pairs right now. Is there any questions about pitch now?
So if I understand
Hello,
right,
sir.
at the
Oh,
moment,
go ahead, Lucas.
if I understand right, at the moment it's at a kickback and it's about to go up again.
Say that one more time. At the moment, is that a
Yeah, at the moment it's at a low and it's about to go up again.
yeah? I mean, like I said, yeah. But wait for your confirmation, guys. All right. This is
Yeah.
what, this is where a lot of people might get stuck or confused. Wait for your confirmations. The market is not going anywhere. If it breaks above, if you break like this right here, right? Like me, I'll stay patient or I'll drop down to a little time frame and only go for 15 pips. Okay. But if price breaks above the 50 or below the 200, understand that you didn't miss the move. Instead of continue in that direction, if you get a 13, if the 13 and the 50 cross over the 200, they're still good. Don't jump in too early. And also, remember market structure, okay? This is just a pullback, guys, right? What did I tell you guys about the money strategy? Just because we have a strategy doesn't mean you forget how to be a trader. Still look at market structure because that would give you more confirmation. Does that make sense? If I thought this was going for a buy and I saw a falling wedge or a descending triangle, wouldn't that give me more confidence that it's going to buy even more? Wouldn't that give you more confidence to take an early entry maybe? Drop a foot soldier in there? Does that make sense? So don't forget what you already know about market structure. All right? This is just something to add on to it. Let me
I
tell you.
have a question.
Go ahead.
Like, how do I know when to abandon ship? Like, when I'm in a trade, like by reading the charts, because like yesterday they had called out a trade and it was going good for me in the beginning, but then like it just pulled back and like I'm still in the trade, but I don't know if I should just like go ahead and take that little loss and just keep going with my other trades, or just be patient and sit down and just wait to see.
Now that's your personal decision. I mean, sometimes it happens. But nothing's 100%. Sometimes it happens. I mean, sometimes like if you're looking on the 1 hour, let's say I was looking at the 1 hour, and I saw this right, but then I
Yeah.
didn't look at the 4 hour and realize that I might be going for a small buy right here in the 1 hour, but on the 4 hour, I'm actually at a resistance level. Right? Maybe I shouldn't take a buy. So some things you can't really, you're never gonna see everything. Put it like that, you know. Um, so sometimes that just happens. If you have a stop loss in place, I mean, just let it. It's a personal decision. Let me put it like that. You can let it ride, or you can say, you know what, I'm gonna cut my losses. I'm gonna stop a couple of pairs. I'm gonna take a couple other trades. I'm gonna make my money and then some back. Okay. Um,
Yeah.
I'm gonna be honest with you. I have had like a $500 account plenty of times, and I get a little bit cocky, I guess, and over leveraged. And I get that account knocked down to like 75, $90. This happens some times. But if you know how to scout and you know how to read the market, right, and have a clear, precise strategy, they can make that back. So I've had accounts that knocked down to $75, $80, and I've been able to use those strategies to build that same account up to 600, 800, $1,000 within a 72-hour period. Okay? So when you take a loss, it's not a loss. Okay? I call it tuition. Right? We don't go to college to learn the skill set. I call it tuition. Right? Learn from it. And then fall back on the strategies that you're comfortable with. And I like to stop my way back to the top. Does that make sense?
Yes, sir.
Okay. And guys, you guys might have to practice this. It's cool. All right? Practice it out. Go and demo. All right? So here, 15-minute was that 1350 cross here, but it was above the EMA 200. So I'm letting them in. I'll go to a different pair, or I'll wait for it to make his mind up. Or I think about, okay, if I'm scalping, maybe I should look at this for an intraday trade. So then I'll go up to the 4 hour. I say, okay, I'm at the 13 on the 4 hour, which means I should be at the 50 on the 1 hour. Right? I'm at the 50 on the 1 hour. I'm oversold here. I'm on the uptrend. So guess what? I'm gonna execute a buy. Right? You can do it. The best thing to do is to wait until the price goes back above the 13 EMA. But I'm not gonna lie, I execute early a lot, right? But I understand that I'm only going for 15, 20 pips, okay? Before I either get out or set a trailing stop. And I also understand that because I'm jumping in early, there's a risk it could go against me, okay? So the safe thing to do is wait until it breaks back above the 13. If you're a risk taker, take it at the 50. If you're oversold, like we are now. But understand your risk, have your plan in place. Okay? The hardest thing about trading is sticking to your plan. Have your plan in place, know what you're going for before you jump in the trade. Okay? If you're gonna go 15 pips, look, I'm going 15 pips no matter what. Even the pips are going up, I don't care. I got my 15. Let's go. Alright? That's yeah, if you have a smaller account, the best thing is always to scalp. So compound your growth. Okay? So before I move on to the Traders Dynamic Index, is there any questions about anything we're going over so far?
I just kind of have. Go ahead.
One at a time. Go ahead. If anyone has a question, just raise your hand and I'll see it. Okay? Go ahead. Asia. No, go ahead.
Asia, me.
Yeah.
I just kind of have a general question. I'm always kind of feel like I'm just kind of bouncing between pairs and time frames, kind of looking for, an entry for a trade. Is it best that I just kind of stick with one pair and one time frame? I just feel like I'm always scanning and feel like I'm just spending so much time looking for entries, but hardly ever find any.
Okay. So to eliminate that, there's a couple things you could do. If you're using a specific strategy, right, and then you like the chart pairs. Because even with the strategy, guys, I like to chart my stuff. So I might have a pair up on here, and I'm charting it on strategy. Make sure you guys neat yourself out. All right. So what you can do is pick 3 pairs or 5 pairs, okay, and just stick with those 5. Because what's going to happen is you might have 1 or 2 pairs that we have a clear trend, and then the other 3 you don't, right? So I like to do 3 to 5, okay? That can always stand, and then decide what kind of trader you're gonna be. Are you gonna be a scalper, an intraday, or a swing? Okay? Starting out, if you're not consistent in your stuff, starting out, stick with being one type of trader. Okay? So if I'm a scalper, I'm trading on the 15, I'm looking at the 15-minute trend, and I'm trading off of the 5-minute. Okay? Or if you're freaking hardcore, you have a good heart, you can go with a 5-minute trend and look at the 1 minute for scalping. Okay?
Okay, thank you.
Yeah. Now, this week, especially on gold, me, my sister, and a couple other people, what we were doing was we were looking at the 5-minute trend on gold. And then we were scalping on the 1 minute. Every time, depending on which way we're going, if price is oversold, if we're going for a sell, then for this to line up, whichever way we're going for trend. So let's say 5-minute from here to here. No, not that. Yeah. Once we have clear direction, because gold has been buying all week, right? From here to here. We know we're on the uptrend. Go down to the 1 minute. Is this where I started? Yeah. We know we're on the uptrend. Going to 1 minute. Every time it was oversold, stochastic oversold, we added EMA, we bought. Every time it was oversold, stochastic oversold, I'm at EMA, we bought. Going for 15 pips. Right here, we went that took that one. When that took that one, when that took none of that, we'll wait it to over here. Buy. These are all inches. Buy. Multiple inches. Buy. As a matter of fact, the only trades that we lost on gold was when we tried to catch the retracement. Okay? This is a trending strategy. Okay? Matter of fact, the most trades that I lose is when I'm going for a retracement. I hardly ever lose a pip smoke move. Okay? Hardly ever. Here, we would not mess with this, right? Because they're looking for a buy. We're looking for a buy and prices below the 13. We would not mess with that. Leave it alone. We break back above it. I mean, prices below the 13 and at the 50 over here. But over here, we're back at the 50, right? We could wait until prices back above. Buy right here. Take it. What about right now? What are we doing right now? Look at the 5 minute. You're on the downtrend. On the 5 minute downtrend, Palmer, right? Look at the 1 minute every time. Come back up to the 13. Look at the stochastic. I mean, you might wait so it's a little bit higher on this one. It's up to you, right? Over here, you have this big old push away. Come back up. Look at the stochastic. Sell. How many pips is this? 17 pips? 21 pips. How many pips is this? 22. I mean, I'm sorry. It's 57 pips. That was 24. When do you come out? You come out at the peak. So here's the thing: if they're selling, on this lower time frame, 1 minute, 5 minutes, and you see the stochastic that's oversold now, I mean that's one indication. Okay, it's time for me to jump out. Wait for it to pull back. Okay, does that make sense? If I'm in the sell, and the stochastic becomes oversold, that's an indication for me to get out. I was about to cuss. That's an indication for me to get out. What's another indication? When price starts to pull away from the 13 EMA, see how price is all the way down here, but the 13 is all the way up here? Price is going to come back to the 13. Right? Price is going to come back to the 13 EMA. So once it pulls away, this is another indication on top of the stochastic being oversold, I'm at the peak. Let me jump out, save my money, wait for a pullback, and come back in. Make sense? All right?
So it's in the pullback mode right now, right?
Right now, yeah, we wouldn't mess with this. Yeah, that's the stochastic is still way down here. Right? It doesn't fit your rules. It doesn't fit your rules.
So it's really just a money strategy with extra confirmation.
Well, yeah, because all EMA strategies are basically the same. It depends on what EMAs you're looking at, right? But our main entry is the 1350 cross. Okay, when you have the 1350 cross and you're in Palmer, all right. Some folks just go right off of the 1350 cross. All right, so let me show you. Wait. Any other questions?
So one of the first things you should look for is I was just asking. So the first thing we should probably be looking for is to make sure that price is first of all below the 200, followed by the other EMAs.
Yeah, first thing we'll look for is the 1350 cross. That's number one.
Okay.
All right. If that 1350 is a cross up or down, then like here, you're not getting in. But first thing to look for is 1350 cross right here. Okay. Now, once you get used to this, you can start trading on the 1350 cross, wait for a pullback. If it's above the EMA 200, you have to take profit at the EMA 200. All right. But the stronger confirmation is once the 13 and the 50 cross over the EMA 200 right here. When both of them are over and you're in Palmer, you're good to go. Okay? That's the stronger confirmation.
Thank you.
Yes. So that's with the stochastic. Okay? That's everything. Let me look at it. Yeah, they're very similar to the administrators. Similar. What's up, Lucas? You have a question?
Yes. So simply, in a week, I'm about to start with my first account. I'm gonna set 200 on it. Till what till what amount of money I grow my account on scalping, and then I move in day trade.
Are you asking me how much?
Yeah, I mean, you advising me for small accounts, focus on scalping, but till what level?
All right, so it depends on who you are. Like number one, I'm not going to tell you how much to put in your account. I recommend if this is the first trading account, no more than $100. Why? Because everyone blows their first account. Everyone. I haven't met one person that hasn't blown their account. I know a lot of traders. So the first account, and that's not to be diabolical or freaking negative. Let's keep it real. Everyone blows the first account. As a matter of fact, if you've never blown the account, drop a number one in the chat. I'll wait. If you've never blown the account, drop a number one in the chat. Everyone blows the first account. So no more than 100. Right?
All right. No more than 100. But scalping till what?
Scalping until you could. I know people that just scalp. This scalp until they're comfortable not moving on to the next level. But it's really not another level. It's just another way of trading. I know people that make $1 million a year just scalping. They don't swing trade. They don't intraday. They just scalp.
Okay. So
So
it's more.
there isn't no. Okay, I can only scalp. Once I get so good at scalping, I should move on. No, if you're good at scalping, stick to scalping. Buy that house. It's scalping. Free yourself. It's scalping. You know what I'm talking about? Okay. Yeah, stick to what you're comfortable with. It's all up to you. All right. Stick to what you're comfortable with. So now let me add the CDI to this. And this CDI, and we're gonna have to do a lot more training on it, but I love the CDI. To me, when I'm about to show you the service dynamic index is the best indicator that anyone can have on their chart. Okay? The best. Let me tell you why. Have a lot of indicators, guys. Don't worry about it. Yeah. All right. So let me do some things. Once you get this, you're going to turn the RSI to 21 colors. I gotta remember. Hold on. Give me a minute. Levels. And a second. One moment. Make sure I'm taking you guys the right time. Insert. No. Market box. Shot window. Oh God. All right. 50, 68, 32. Left, right. 60, 50, yeah. Let's just use this. Yeah. All right. So before we add the stochastic back on here, let's stick with this right now. All right. So this is the Shakespeare's dynamic index right here. This is what we're looking at. I switched my inputs. This was 3 before, I believe. I switched it to 21, 0, 34, 2, 0, 7, 0. Right? Now, I might have this. All right, Richard. I might have this study inside of that document also. So don't worry. And you're also going to get this indicated. Okay? I can't give you this one. All right? So, for me, I'd like this to be 50, 38, 20, okay, 80, 20, 80, 50. All right, this is good. Now, my colors, let me just do this. Get this right now. All right, this is how it's going to look when you guys read it. All right? Now, here's the different parts of the Schroeder's dynamic index. This thing tells you a couple of things. It tells you momentum, it tells you market sentiment, and it tells you the trend, okay, and volatility of the market. All right. Now we have on the outside, this is basically just like the Bollinger Band. Okay, this is the Bollinger Band on the outside. The green line, this is the RSI. All right, this is the RSI right here. The green line is the RSI. The red line, this is called the trigger line. Okay, the red line is called the trigger line. This black dotted line right here, this is called the 50 static. Okay? This black line, dotted line, can you guys see that? Let's just put that there. This is called the 50 static. Okay? Now, when the red and green line are above the market sentiment line, and the market sentiment line is above the 50 static, you're in an uptrend. Okay? You're in a strong uptrend. Right here, this is the weak uptrend. All right? When price is above the static, this market sentiment right here, when price is above the market sentiment but below the static, this is a weak uptrend. Okay? When market sentiment, the RSI and trigger line are above the 50 static, that's a stronger uptrend. Okay? Now, This RSI line. All right, so let me just go over. Let's see here. Let me do this. Before I move forward, is there any questions about what I just not covered? You gotta hear this multiple times, so it's okay if you don't remember. Okay? We can hear it multiple times. So, this is one thing that I want you to realize. You see how when I move to the left, how that 50 static is actually moving up or down? See that? This indicator is fluid. Okay? It's fluid. So you have to pay attention to where that 50 static is. Everyone see that? All right? So, okay. Let me make sure I explain this in a great way. All right. So, right here, another thing I just want to point out is that, without confusing you, the 50 static is the 50 EMA on the chart, the intraday trend. The 50 static is the 50 EMA on the chart. So if this green line is the RSI and it represents price, right? Then in this area right here, we should see price below the 50 EMA, right? As RSI represents the open and close of price, all right? Not if we have wicks, if there's wicks on the candles, this RSI does not follow the wick. It follows the body of the candle. So you can't get faked out. Okay? So if I look at the chart, if I pull the CPI down, price should be below the 50. Right? Let's look. Right here. Price is below the 50. And then look, right here. When price comes back up to the 50 on the chart, look where it's at according to the staggered on the CPI. Okay? So just keep that in mind. So here's how you can identify sells and buys. All right, I'm going to show you how to enter and exit according to the CDI. Okay? On the CDI, if you have the red line above the green line, okay, the red line above the green line, the sugar line above the RSI, and they both cross the market sentiment, they're good for a sell. Okay? Now you can ride that sell all the way into, this is how you know when to exit, when the green line crosses back above the red line. That's your trigger to exit. Okay? So, for a sell, you want the red line above the green line, all right? And for it to be a real strong sell, you want both the red line and green line to cross over the market sentiment. Okay? For a sell. Now, that market sentiment, you also want that to be below the 50 static. Okay? So, is that confusing? Do I have to go over that one more time? I feel like that was confusing in my head. Are you guys good on the sale?
Yes, please. And is the market sentiment the yellow line?
Yes, ma'am. So when market sentiment is below the 50, they're looking at what? A downtrend. When market sentiment is above the 50, they're looking at an uptrend. Okay? So for a sell, you want the market sentiment to be below the 50 static. You want everything below the 50 static. Let's make it simple. You want everything to be below the 50 static, and you want the red line above the green line. Red, sell. Red above, sell. Okay? So red line crossed over the green line. We're looking, that's the entry for a sell. Right? The stronger entry is to wait until both red and green have crossed or crossing over the market sentiment line. Your exit is when the green line crosses back above the red line. Okay? Are we good? Yeah, you guys good? Your exit can also be, all right, so for you guys that like to hold trades a little longer, your exit could be, let's say you jump in here, right? Price is at the 50, you got a green line crossed over the red, right here, that's crossed over the yellow, right there, boom, crossed over market sentiment. Your exit could be not until the yellow line is above the market sentiment. You could stay in the trade the whole time, up until here. So let's do this. Insert. All right, so price is at the 50 EMA. Look down at the CVI. Market sentiment is below the 50 static. The red is above the green. Pull the trigger, okay? You can put the trigger there on that candle, or you can wait for a pullback and then pull the trigger. All right? So I like to pull the trigger on my crosses. So boom, sell. My stop loss is way up here. Okay, let's say we took entry in 1 hour time frame. So we'll do that, right? Let's say we took entry somewhere in this candle, right? You could hold that sell until market sentiment crosses above the 50. Right there. And the red and green line are crossed over. Because now that's showing what? An uptrend. The market sentiment is above the 50 statement. Now they're showing that's an uptrend, right? So the exit would have been right around here somewhere. That's still 66 pips, right? At this peak, it was, yeah, 135 pips, right? So once you see that market sentiment going up, I mean, you can start the exit anyway. But that's the peak right there. Was that confusing? Are you guys good?
I'm good on the how you explained it, but I think I must have missed how to put the static 50 line on my TDI.
Yeah, it's already on there. It comes on there. The TDI, the parts of the TDI are, this is the TDI right here. All that comes on it. Okay? So the Bollinger Bands show you what? The volatility, right? So once you start to get a squeeze, you can expect a breakout in one direction or the other. Okay? That shows the volatility. When the RSI No, never mind. I'm not going to say that right now. I'll wait for the next meeting on next call. So that's for a sell. Is everyone good on that? Well, let's go over a buy. Then I'm going to answer questions on the TBI. Let's go on that, Asia. Asia, your hands up. Do you have a question? No? All right, cool. So let's look at a buy.
That was me that asked the question already.
Okay, all right. My bad. Cool. Let's look at gold. And don't worry, guys, we're going to be going over this a lot, okay? So once you guys get this, man, this is all most of my clients use as this strategy, okay? So, where's the 50? Right here. All right. So gold. I'll spread that bad boy out. All right. Gold. Man, that's perfect. So check out the 50 static. I'm just going to look at the 50 static. See how it moves? So you have to pay attention to that. Okay? I made the mistake plenty of times of jumping on the chart right here, right? And seeing the market sentiment is below a line and me thinking, oh, that's below the 50. Yeah, we're about to go for a sell. Okay? So make sure you pay attention to that. All right. So market sentiment. So we'll look at gold right here. All right. One moment. All right. So I'm gonna go over this real quick. We got like 15 minutes. Okay. For a buy, what's our rules for a buy? It's the exact opposite of the West sell. We want the market sentiment to show a long trend, right? So it has to be above the 50. So when I have jumped in here, if I'm sticking to my rules, no. Okay? I would have waited to around here. Okay? Now, this shows me, I may not jump in here, not yet, but I will wait until market sentiment is above my 50, right here. Okay? I should like to see. Market sentiment is above my 50, now I'm showing the long trend on the 1 hour. Okay? Once I get a 1350 cross, 1350. Once I have my RSI cross above the green, so it's going to be a green goes above the red, and that crossing over market sentiment, you can actually look for entry around here. Okay? And you can ride that bad boy all the way up. Ride that bad boy all the way up until the market sentiment line closes below the 50. And it will still be in the shade. From here, it's still in it. Strong uptrend. Strong uptrend. Okay?
Okay, did you say the market sentiment closed below the 50?
On the buy, you want the market sentiment above the 50. The exit could be that any one of these points, whenever the RSI and the green line um, way, like when they pop out the top here, that could be your exit at any time. Or you can do like I do mostly, as I wait for this market sentiment line to come back below the 50. Look, the 50 is all the way down here. The 50 is all the way down here. See what I mean? So if you see everything above the static, you know you're in the uptrend. You're good to go. You're looking for buys. Buys only. Buys only. Now,
So for the most, everything is fluid, right? Like
yeah.
all of the lines are fluid. The 50 static is the only one that's gonna always be the same.
The 50 static is fluid also. Because remember, the 50 static represents the 50 EMA on the chart.
Oh, okay.
See?
Yeah. You said the red was the RSI. What is the green?
The green is the RSI, and the red is the sugar line. Right? So that being said, so right here, how they're going back and forth right here, red and green, that shows consolidation, right? Or you can't really get a clear indication. That's why you wait for the market sentiment to come over, and now you see the stuff is spread apart more, right? So the red is your sugar line. A lot of people use that as, all right, if green crosses below the red, I'm selling. Until my green line crosses back above, okay, I'll close there, right? So wait for it, green crosses below it, I'm selling. This is what a lot of people use it as when they're scalping, okay? So let me go back to the 5 minute. Here's the 5 minute right here, okay? So on the 5 minute, everything is below their 50 standard, so they're only looking for sales, okay? They're only looking for sales, all right? With that being said, when the green line crosses below the red line, right here, okay, come on. Right there, all right, when you have that, you can enter the sell and don't exit until the green or red line crosses back above. So you would came in probably right around here, somewhere down there, right? So let's say that right here. Boom. 144 pips right there. It came out right there, 66 pips. Okay? So at the peak, 144 pips. Alright? Now, I'll go into that next week. Okay? But that's the simplest way I can explain it. Okay? Everything's below the market static. That's right here. I know I'm in the downtrend, right? Alright. I hopped out of this trade. I grabbed 66 pips in about 5, 10, 15, 20, 25, 30 minutes. I hopped out. I'm not going to jump in for a buy. I'm in the downtrend. I'm only taking sales, right? So I'm going to wait to my RSI, that's below my red line. Boom. Enter for a sale. You're good. Set the sale until when? Until you have another RSI and sugar line cross. Oh, you guys really make so much money. I'm ecstatic. Boom, right? What is that? 73 pips. How many are you going for? You're only 120. Pull the trigger. That's what I mean about pulling the trigger. Okay? I'm still in the downtrend. Everything is still below the 50 static. I don't even have support resistance on here yet. Alright? Price cross back above. I'm waiting for it to cross back down. This is on a Friday. So you probably wouldn't even. Is that Friday? It looks like it. Or it might be change of session. Alright. So here. Price cross back below right here. The miner jumped in here. This probably been a scratch. Okay? That would have been probably a scratch. Once you see this right here, the 1350. Keep on saying that. Once you see your RSI sugar line plus back over your market sentiment, that's when you could, if it's a little bit more sketchy, so you want to wait. But you're probably special on this one. You might jump in real quick and start to cross back over and jump back out. That's cool. All right? You're going to win more than you lose. I promise you that. And to stick to the rules, you're going to win more than you lose. All right? So, okay, that's a scratch. How many pips is that? Enter down here. Look up. It's about 42 pips. All right? That looks like a change of session right there. So, I'll go that after we're done. So that was the scratch. That's cool. All right? So here we go again. Right here. This is the early entry. When the red line comes to the green, it's the early entry. What did I say earlier? The safest entry is to what? Wait for your RSI and your trigger line to cross over your market sentiment. So you could have called this early entry, which is cool. And you would have got out probably around here. Okay? Early entry, we would call 46 pips. Yeah, if you would have waited, so both of them cross right here. And they're just coming in, the exiting on the entry, on the crosses right here. They still grab about 30 pips. Okay? But as long as both of these are still below that market sentiment, you can stay in that trade. Okay? You stay in that trade. How do you know when there's a possible peak? When this may be a peak in this move before it starts to pull back for another entry. When the RSI comes out of the Bollinger Bands, this is called a sharp fin. Okay? When the RSI comes out of the Bollinger Bands like this, you have like a little V, that's an indication that that is the peak of that push. So you can exit there. That's the exit point. If you want to hold, this is the exit point. You have options. Okay? So from here to here, how many pips is that? It's about 75 pips. If you want to wait it, it's still going to got about 40 pips. This is 5-minute intervals. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 1 hour, and about 20 minutes for 75 pips. Alright? Are you taking the pullbacks? No. Okay? With the CDI, you don't need the stochastic. Okay? But I'd like to have it for extra confirmation. And I'm going over my time a little bit, I think. But do you guys mind if I take an extra 5 to 10 minutes? Do you guys mind?
I don't mind.
She don't mind. All right. If you do mind, just pop off. This is the recording. All right. So, with this being said, this is all you really need. Okay. That CDR is with the split 11. That's why you want the DPS. So you can see the CDI a lot clearer. Okay. Stochastic. Everything's good. All right. Check it out with stochastic. Go on the 5 minute. This is just to give you a little bit more confirmation if you're kind of iffy on your entry. Okay, I'll make that a little bit smaller. Just a little bit. Okay? So let's look. I can't tell the difference between our entries and S's for real. That was an entry. That's just an entry. Oh, that's an exit. I can't remember. I should have made them different colors. So looking at your TBI, you're gonna get more entries on it because it's a little bit more precise than stochastic. Okay, because the stochastic and the RSI to me, they do the same thing. You gotta see it move together, right? I added the stochastic because I was looking on my phone. I was looking on my phone, and there's a way to kind of put like a bootleg CDI on your mobile MC4, but it's not that helpful at all. So that's why I added the stochastic. Because on my phone, I can see the same overbought and oversold areas. Okay? And then I just added it to my desktop, and it is what it is. It's pretty cool. So, for added confirmation, you can wait until like you have like a cross over here. They're looking for sales. They have a cross right here. Boom. And you see the TBI that's in that sales zone. It's just a little bit more extra confirmation, especially on a smaller time frame, and especially if they're trading fast moving pairs like indices, gold, GBP. Okay. Um, this will give you a more confidence in your entry. Okay? So just adding it on, doing the same thing we were doing before we had the CDI. All right? Nothing has changed. All right? Just with now, with the CDI and with our POMA, we know that we're definitely in the downtrend. So you're only taking sales. Wait for the market to reset and pull back. Make sense? So I think this is all I'm going to cover on this call. Although we could do deep in the CBI, but I think you guys have enough. Let's start practicing. Okay? Before I close this out, do you guys have any questions about anything we've covered? I might have to add.
Can we pick up where we left off? Like, are we gonna go over this again next week?
I'm sorry, you're breaking up.
I said, can we pick up where we left off? Like next week, can we pick up over this again?
Yeah.
Okay. Because I think I have a good understanding, but I just want to make sure and ask some more questions once I study some more.
Yeah, most definitely. Most definitely.
Maybe also do some live practice scalping on a demo account in front of us, showing us what you're doing.
Yeah, will we have more time? Yeah.
Excuse me. Do you go in the market on the downtrend or uptrend as far as the pullback is concerned?
If you're on the downtrend, you're waiting for the market to pull back. So we're on this downtrend here, right? We're waiting for the market to pull back through the EMAs. Either one, 13, 50, doesn't matter. You're waiting for the pullback to jump in this down, back down. Okay? And this down, back down. Alright? So once you start to the pullback, you're not trading this. This is a no-go. Okay? We're waiting for this. Alright? If we're in the uptrend, that's a big one. My son's yelling at me. When you're in the uptrend, you're waiting for the pullback. Right? You're not trading this. Waiting for the pullback. So hop in the buy back up. Okay? The hardest part for all of us is this part right here. Waiting for the set back up. Does that make sense? That's the hardest part. Is that to have patience, right? You gotta have patience. So, hope you guys don't mind. I'm gonna take a picture real quick. This is on Facebook. All right, are there any questions about anything at all? Any questions? Does everyone understand the CVI? At least have an understanding to where we might be able to hop in the market. If not, we still have the stochastic, right? So practice with both is everyone is best for you. I'm gonna go ahead. I'm gonna end this call as I'm actually heading out on a road trip in about an hour. So I'm gonna make sure that I can download this video, convert it, add it to YouTube, and post it in the group so you guys have everything. Okay? So, last minute questions on one. Going twice. All right. You guys have a great weekend. Thanks for hopping on the call earlier with me this morning. I hope I was able to transfer this information to you guys in a simple way so you guys can understand it. Don't worry, this will not be the last time you see this stuff. We're going to be going over all month. We're going to be trading with it. All kinds of stuff, okay? You guys have a great day.
Thank you, Deante.
Thank you.